good evening to everybody. For those who are attending for the first time, we've been running this for the last few weeks. The idea is to be a very chill out session. It's not a presentation. It's neither a lecture session. It's just people talking and trying to see and keeping us in good spirit. So today we're going to sort of talk about angels and investors' perspective during the pandemic. But before we start that, let me just introduce you to the team at HTIC. We have Prajista online, who's our incubation manager. We have Sumitra, who's our pre-incubation manager. And we have Archana, who runs our Crush program. She's the manager there. And we also have Arshini, who helps them with various activities among the three main programs. So before we start, Arshini she runs a poll every Fridays, which helps her decide what we talk the next time and during the week as well. So Arshini, over to you to run the poll.
Thank you, sir. So you'll be given the link in the chat box now. Kindly click on the link and enter into the website. So there you can give your polling results. So first question, what is your prediction on the COVID vaccine to be available? Option A within 3 months, option B within 6 months, option C within a year, option D can't predict. So you have the link in the chat box. Kindly click on the link to enter into the site. So you have been getting responses. So next question. What do you think the major impact of continuing work from home now and in near future? Option A, increased productivity. Option B, increased stress. Option C, lack of physical interaction. And option D, quality time with family. Kindly giving your options in the provided link. Here we're getting responses. So moving on to the next question. Which industry do you think is reaching its heights during the pandemic? Option A, gaming. Option B, healthcare. Option C, food. And option D is movies and series. We're getting responses for that. Moving on to the next question. Do you think the current model of digital cafe works? Option A, yes. Option B, no. Or option C, needs further modifications. Kindly giving your inputs. So are we receiving responses for it? So that's the end of polling. Thank you so much. Results will be shown to you all in quite some time. Thank you. Thank you, sir. Over to you.
Okay, thank you, Arshini. Okay, we're going to get started. This evening we have with us, we are very happy and excited to have my very good friend, Rajan Shrikant, President of Kiritsu Forum. Thank you for your time, Shrikant. We have another good friend of mine from Chennai Angels, Balram Nair. Thank you for, you've spent a lot of time this week with us already. Thank you very much, Balram. And the third speaker we have for the first time, she's come. Hopefully she'll keep coming. Shruti from Indian Angels. So we've got three of the largest networks in the country doing angel networks. So we're going to pick their mind and also learn from them what we're going to do. So I'm going to throw out the first question for us to get started. I'm going to ask the three visitors, and maybe Shrikant can start off with. What are you specifically looking for when you're investing in companies during this COVID-19 season?
Well, first of all, the emphasis is really not so much on new companies, though we are looking at them. We've not stopped looking at new companies, but the emphasis is really on our existing portfolio companies first, and making sure that they have enough both capital as well as clarity of thinking on what they should be doing. So I would say, and that may be more acute for us than it is for some of the other two user groups, because in our case, many of the time we are investing in really in seed stage, where many of them are pre-revenue. So while the companies that are in revenue actually are dealing with a different set of problems, which is with revenue stopping and all that. In our case, we are actually dealing with making sure that they have enough runway, and whether or not they should be pivoting from what it is that they are currently doing, and they are focused on what products they are focused on trying to get to market, whether that's still relevant. So I don't know that in terms of coming back to the question about what are we doing, what are we looking at in terms of if we are looking at new opportunities. Obviously, we are looking at opportunities that will we believe in trying to skate to where the puck is going to be rather than where it is right now. So
Okay.
we are trying to look at where is it that we expect the markets and the opportunities will be. Again, given that we fund companies before they actually are expected to be in revenue, so we are looking at where will revenues be, where will demand be a year or year and a half from now. Will it have quote unquote gone back to normal? So therefore, we should not change anything about what we invest. Or in certain industries, we expect that there are going to be some fundamental transitions and changes. So from that point of view, healthcare is an area that we absolutely are looking at. In fact, tomorrow we have our monthly forum. We have 2 healthcare companies presenting. So in that sense, you guys are in a sweet spot. We are definitely looking at healthcare companies and healthcare-related business models as an area. I think we are also looking at a few other areas that we, again, with some of the trends that I hope the polling will show, like work from home or remote working is increasingly becoming something that we expect will stay in some form. So we will look at those as opportunities to make sure that companies that have offerings that enable or are built on assumptions about more remote working and work from home type of opportunities we'll probably look at, other than continuing to look at some of the things that we don't expect will change. Again, given that our horizon is we're looking at revenues a year, 2 years, 3 years down the road. That's it.
Thank you, Shrikant. Okay, those who are not speaking, please mute. Shruti, your take on my question.
Sure. So I'd like to add on to what he said. I think in terms of, yes, we are looking at new opportunities, being an angel network. Some of the sectors we are looking closely are health tech, definitely. EdTech is also another interesting sector because, most of the learning has now moved online. Seeing a lot of traction there. Then a lot of online businesses, like, a lot of businesses that have moved online, whether it is they're selling wellness products, consumer products. So that's also another interesting space. And agri-tech is also very interesting because, there's a lot of agri-tech companies which are doing really well. So these are sectors that we are looking at closely. And we are looking at opportunities in all of these sectors. In our case, we prefer that, the companies have some traction. It may not be significant, but, at least their product is tested and, they have kind of launched their product and some revenue has started. So they have some amount of traction that we can look at. Not completely, not very early. It's easier. I mean, this is what our investors would be more keen on if they see some traction there. So yeah, I mean, if it's in the right sector, the opportunity is good, the team is good. It's something we are looking to explore as we go ahead.
Great. Balram, how about Chennai Angels? What did you guys doing?
Yeah, can I copy paste a couple of things they've said because I'm
Yeah,
the last.
sure. Sure, you can copy paste.
Yeah, so
That's what the internet is for.
yeah, so for us, we started off like what Shrikant said. When the year started, we said we didn't want to be too aggressive on new deals because our primary motive, the most important thing for us was to make sure companies within Chennai Angel, the ones we funded, needs to be supported. Right. So when we looked at our portfolio companies, we realized that there are a bunch of companies that are good, will continue to be good post COVID, but then they need to survive in this interim. So 4 or 5 of such companies we've identified, and we are actually funding them. We would complete funding by the first week or second week of July.
Okay.
Said that as we speak now, we are also looking at 4 new deals. Which in fact, the first deal we did this year was a new deal, it's not a existing portfolio company. So the deals that we have around 4 or new deals also that we are aggressively following up now. The only thing we look at is any company that can spend the money and grow during COVID. At this point of time, we would want to invest in a company that can actually start using the money once we fund them and not stay alive for the next 6-7 months and then use it 5-6 months later. So we're also agnostic, and we also look at good businesses like what Shruti mentioned. We are open to. We're not very specific on any sector at this point.
Okay, great. I was expecting 3 different answers from the 3 of you, but it's good that the answer was, I was going to get one was, we are investing in new companies, which Balram says yes. And the second one was, we're investing in our portfolio companies to make sure they survive, which is what the other 2 said. And there was a third option I thought some of you might say, we're not investing right now, which is great. No one has said that. So we're doing quite well then. People are still investing. So that's wonderful. Any one of you at the audience want to join the conversation, you're most welcome to join the conversation. It's not going to be a straightforward just me asking questions or my panel speaking. Anyone can jump in and throw in a point and make the conversation fun. So the next one I'm going to ask is, what do you see is the growth perspective of investment in the current scenario? Maybe we can throw it to Balram so he can't cut and paste this time.
So what is the question, Muthu? What is the growth?
What do you look at the growth perspective of investment in the current scenario?
Okay, I can talk about what we do, what we feel could be the growth potential for investments here.
Okay.
We would cross our last year's target in the month of July.
Okay.
So the number of deals that the new deals at Upfronts that we do would surpass the entire amount of investments that we have done in the last financial year. So there are a couple of investors who have taken a back step, who want to wait and watch, but there are a good number of investors who really believe that this is an opportunity to invest. It's like buying stocks when the markets are down, right? So there are a good bunch of investors who feel that this is the right time to invest. Good businesses can come up now. You could get opportunities where we have missed earlier. For instance, a network A is invested where we missed, and they need an up round. On a normal scenario, we would have had to pay a much higher price if we want to buy into the company. But today, I might be able to look at the same company at a slightly more cheaper price, not as low as what the early investment happened, but at a cheaper price. So I think
at a good price.
At a good price, yeah, at a good price. So I think the absolute numbers would be definitely lower than what happened last year, but the good companies that needs to be funded will be funded. We would, I think, do close to 150 to 160% of what we have done last year.
Okay, Shrikant, what would you say?
Okay, so actually, I think it's a bit different and a bit similar for us. So far this year, we've done 7 investments, and we probably will close our 8th soon. But I will say that a lot of these were probably under discussion even before COVID hit. So I think post-COVID hitting, so the fact is that investors haven't frozen up. They're continuing to fulfill commitments. I mean, look at the DDs and make investments. But at the same time, I mean, do I expect it to ramp up? Do I expect it, like Balram said, to be 150% of last year? I don't know. I don't think so.
Okay.
I think it's going to be a bit more tepid for us. We may still do roughly 10, 12 deals this year. But I will definitely say this: the amount invested has dropped quite dramatically, because a lot of people are actually, again, remember I said we invest very early. We invest before revenue, and so there are many investors that are saying, look, can we actually tranche the investments? Can we do smaller investments to start and then ramp it up? Give them more money down the road. I think some of it is because of the uncertainties about the companies themselves, but some of it is also cash availability on their part. Having money to be able to put into the deals. So I think that this year will probably be relatively. My guess is that on a total invested amount will be less than last year, but on a total number of deals will probably be flat from last year. Relative, maybe a bit more, maybe a bit less. I don't know. But I think definitely, as I said, the big story for us is that the deal sizes are substantially smaller.
Okay. Shruti, I'm not going to ask you the same question. I'm going to ask you a different question.
Okay.
What sectors do you think are immune to the current situation and they will continue to attract investments, if there's any?
Yes, I think I will repeat that, but I said, health tech is really attracting a lot of investments. And edtech is again, edtech and health tech, and online businesses, like, they could be having an e-commerce presence, and where the significant portion of their business is more online and less offline. Those kind of businesses are what are becoming interesting for investors right now. And even to add to your growth perspective, in fact, we have just launched, in fact, just today, we've launched this program. We're doing fast track funding. So where we are saying that right from the application date, we're looking at fast tracking investments. In 45 days, we should be able to close investments.
Wow,
So
that's really
yes. So we've just launched this today. So we've opened that up to startups where they can apply. And if they meet a certain amount, I mean, they'll get their decision one way or the other really fast. So to really kind of fast track the process even for them. And we're utilizing this time right now to even engage, investors are also, we're able to engage them better in this time, apart from, of course, increasing the deal flow and hoping, that more and more flows, but also, increasing investor engagement.
okay. And a question to all three of you. What kind of measures should startups take to manage to sail through these difficult times? Many of them are struggling to pay rental, pay salaries. How do you think what measures could they take, or where can they reach out? Primarily, what should they do? So anyone can go first. I'm okay with that.
Well, I think Muthu, we've done a session with your companies before, so the message that we delivered there is probably still the message, even though we did that about a month or so ago, which is that ultimately, I mean, look, what I think at that time we said, look, we don't know what the future holds. That's still the case. I think nowhere in the world have we found a sustainable company. I mean, countries or economies have come out of COVID and gone right back to where they were. I think, even in places where they tried that, they've actually had regressions. Things have been resurfaced, etc. So bottom line is there's so much uncertainty that the only one rule that actually dominates across everything is cash is king, right? So you've got to conserve capital as much as you possibly can. And while that, so, and therefore, so I would say even those that are looking at pivots, again, as I said, many of our companies, because we fund them early, there's an opportunity to pivot, but obviously every opportunity to pivot comes at a cost. So we tell them that, look, don't pivot just willy-nilly. We've had people that, and again, I don't mean to belabor this, but everybody wanted to build ventilators about two months ago, right? And so we say, don't do that. Don't do knee-jerk. Go after something that you think is hot. So stay with what you've done because you have spent a lot of time understanding that space. As long as you can be clear that it's relevant, that it will. And again, for us, it's the relevance is not short term. It's looking at about 12 to 18 months out. So if you believe that structurally nothing has changed, stay with what you've got, conserve cash, find ways to tighten your belt. Salary cuts are something that's just everybody is just happening all around. Try not to lay off people if you can, because it's hard to find good people. But try and tighten your belt in every which way possible. And you'll find that, talking to vendors, suppliers, etc., are things that you absolutely need to do to try and see if you can conserve that capital to survive a bit longer. So at the same time, doesn't mean that we are saying don't take advantage of short-term opportunities. You absolutely should, but always balance that against what is it going to cost me to experiment with getting into a new space versus how much capital do I have, and is it going to take away from my ability to survive longer? So I'll shut up there and maybe let Dalram and Sudhi add.
Yeah.
Yeah, as Shrikant said, cash is king. So we've done an entire round of session with all our portfolio companies, and the message that we passed on is conserve cash. There's no other way that you can tide over what is happening now.
Okay.
I don't think there's a second way of handling this. One other thing that we've told, we feel that companies should internally reflect and do is that if they are in a position, if they're today completely choked and they believe that their offering is going to bounce back once COVID subsides, they can go on ice. That is, they can just completely cut complete expenses if they have to negotiate. See, I know portfolio, not portfolio company. I know companies where they have told employees, we cannot pay salary today, but we will try and meet your expenses. And I mean, told the employees this is the problem that we have, and managing expenses for them than actually giving them salaries. So as much as possible, cut down your expenses. If possible, if need be, go on ice and then resurface once things are better.
Okay, Shruti?
I think very similar. It seems like a copy paste right now. Yes, cash is king, and conserving cash is the only way to work. And also probably looking at various options for pivoting if you're completely impacted. Which are not impacted, they are kind of managing. But the ones which are like, if you look at tourism and all of those which are like, the hospitality industry, they are really, really impacted. Right now, pivoting to, something else can be the only other option to survive. No clear-cut solution to the problem right now. And so, coming up with innovative ideas. And I would like to reiterate, yes, laying off people may not be the solution. And probably keeping them engaged or keeping them motivated in different forms, depending on each one's situation is different. So yeah, you have to kind of look at a combination of some of the factors that, they already mentioned. There's no one solution that kind of solves this problem.
Okay, so what in the bottom line you guys are saying is they need to really conserve their cash and try to manage to the best of ability with the minimal expenses in order to survive. And you're also saying it's not top priority to pivot as long as they know what they're doing, unless there's a short-term opportunity in pivoting. So which I think most startups are doing that, fortunately. Majority of them are not pivoting for the sake of pivoting right now. They might have been doing that about 3 months ago, like Shrikant was saying. Everyone was jumping into ventilators, protective gear, face masks, and all sorts of things. So I think that's a really good thing. And there's a question, but just has asked a question. What are the general compliance checks investors look at before investing?
Is that relating to, I mean, it is not relating to COVID, right? It's just
general. No. Just whenever you invest, for example, what are the things do you look for? What do you check? Whenever you're doing your DD, what are the general compliance do you check?
Oh dear, I don't even know where to start, because there are professionals who do that for us. So it's everything, I mean, there's a legal compliance element. There's obviously all of the statutory filings, making sure that you've done all of that. All of the making sure the legal compliance has to do with, is there any pending litigation? How are your contracts? Are they all in good shape? Whether it is vendor contracts or employee contracts. all of those are in shape. Again, the statutory filings, are they up to date? Already, of course, then there's the financial compliance also, making sure that you're meeting all the accounting and other standards and requirements. So these are, again, I'm not the expert at that. We generally speaking, and I'm just being honest, what we do is we outsource it to these service providers and let them tell us red, yellow, green where there's an issue.
Okay, she's asked. She's rephrased the question because she's doing DDs now. Because we've had we are running a ground for DST now, and we've done exactly what you said. We have outsourced it. We are not doing the DD ourselves. She's rephrased the question. She's asking you, where do most of the startups fail during these checks?
Fail is a very strong word, because you see, the question is most of these kinds of compliance related issues are fixable. Meaning that if there is, even if there are violations, there are violations that may result in some fines. But generally speaking, that's what we see is a lot of things, like, for instance, the governance is really one area where it's terrible. Most people have an awful job of doing holding the regular meetings, keeping the regular minute books, all of that. Occasionally, there are also statutory tax and other filings that are missing, which are a bit more dangerous, because some of them you could actually be imprisoned. There could be stiff penalties associated with that. So I think those are the two areas that we see stuff. Though, of course, the other areas where we rarely ever see things, but I think where they would be much more scary has to do with where there are legal or other liabilities that have not been publicly shared, or disclosed, things like that. Where there are some fundamental accounting financial irregularities that actually are not fixable, in some ways, or would. Sometimes there are simple things that actually are very painful, but people haven't done them and they've ignored them because over the years nobody ever told them that it was important. But by the time you kind of come around to discovering it, it's become quite a bit of a mountain. Okay. So I don't know. I want to pass it on to Balram. This is a hot potato, so I'll just pass it on.
Just to add to a couple of things to what Srikanth said. One is I wouldn't call it completely compliance. One is integrity of the entrepreneur. That is what he discussed with us, and if he's hidden any facts, when we discover that in the DD, it's a complete no-no. We would not want to proceed then. Second is if he's got a huge liability. For instance, he hasn't paid GST, and that comes up to close to, say, 50-60 lakhs. And then he's looking to raise funds to pay the GST. He's saying, I'll pay that an entire amount out of the funds raised. Then we do not want to do that, because we would want to, one, he was not compliant enough to make sure that GST was paid on time. If it's a small amount, we're okay with that. 5-10 lakhs is okay with that, but not a large amount. Apart from that, I don't think we have actually rejected any deal based on compliance, because as he said, all these compliances are actually fixable. We might take a longer time to complete it, but all of them are fixable.
That's good news for startups. Shruti, would you agree with that you allow them to
fix? I would agree. I think integrity of the founders is very, very critical. If they are hiding something, so that usually emerges up in the initial stages of diligence, that crops up. So if that is there, then it's very difficult. And apart from the legal and financial diligence that is done by the third parties, that pretty much throws up all the red flags.
Okay. So
I will add one thing though,
yes,
which is that sometimes, the rare occasion when there are a lot of these red flags, there is a decision to be made on whether you want to, because you see, we will rarely ever release cash until all those red flags are adequately addressed. And therefore, that may sometimes, I have seen cases where companies have taken as long as 6 months or 9 months to get all that addressed, and so it does end up hurting them, because the money is not we will not sign off. We won't release the checks until the red flags are cleared, and that can be an issue. So I would say that to Pratishta's question, these hygiene factors can raise quite a stink, And so it is in your interest, even though you say, I'll take care of it later. What happens is when after all of us know that raising money is not like, even though Indian Angels is wonderful that in 45 days they're willing to make a commitment. And normally it is 3 to 6 months by the time you actually get any money from any investor, typically, let's say, and if that is extended by another 3 months or 6 months because you have to get compliance taken care of, you might just die in that time.
Okay. Now, there is a question in the chat box. I think, Sundar, do you want to ask that question yourself? He just raised some funds.
Okay. Hey, hi guys.
COVID, so he can speak a little.
Yeah. So thanks. The question is to all of you from the investment community. What we see in healthcare and perhaps across other industry segments, this COVID pandemic has actually shaken up a lot of supply chains and value chains, right? Some of them would survive, some of them would come up. Do you already foresee any, or do you already see from where you are sitting some moves towards mergers and acquisitions, consolidation of supply chain? I can actually think that I can imagine that in the healthcare it's going to be quite common. What do you think about it?
Shruti, you want to go for it?
Sure. Yeah. So I think that's quite a possibility because one big reason is as you know, we were just discussing that for some of these startups, surviving may be tough, and if they are not able to survive through this, then probably the best solution, even though they have a phenomenal product, they might just look at selling off their stake, and that consolidation there may be a key. So yeah, I think M&A would be very likely in these times. The large will be able to pick up these times, and even if you look at it from an investor standpoint, people are for bridge rounds at lower valuations, which is a fact because they need and so even consolidation is one of those similar kind of moves which they would make. Yeah.
Okay.
And also probably in the customer side, also some customers would disappear perhaps, right? I mean, whomever you are chasing.
Yes, absolutely, because liquidity is tough everywhere. Yes.
Okay. Srikanth or Balram, you guys want to add anything to that?
Yeah, I think it will be a non-cash deal. It will be a stock swap when you have an M&A now. This is we have had around 3 rounds of discussions regarding M&A. We also felt that companies will definitely come to this route because you might have 2 or 3 companies who are allied, complementing each other, finding it difficult, and all might want to join hands together and try and fight COVID. But I've not actually come across any transactions as yet. I think it might take a month or 2 plus to come through. But then these discussions have already started. I've had at least 3 rounds of discussions with a couple of support partners to see whether any of our portfolio companies wanted this or not.
Okay. There's another question by Ranga Vasu. Ranga, you can unmute and ask the question.
Thanks, Muthu. This is Balu Ranganathan. How about the funding for startups, India-based startups working on data analytics in the healthcare industry, basically leading for artificial intelligence? We are not into artificial intelligence right now. We are into big data analytics. I think you guys may be knowing IIT Madras has started a first, I think, online course for 3 years course on data science. I think that's first in India. So what's your take on that? Thank you.
Nobody wants to answer. I think that IIT move is a brilliant move, and I think it's going to help a lot of startups who don't want to now go to college and do their IIT online and do a startup. I think it's a brilliant idea, personally. So, Srikanth, you can.
Actually, on the whole data analytics, we actually invested a company which interestingly enough is actually one of the advisors to that is the professor who heads up the Robert Bosch Center at IIT. This company is in the AI in healthcare space. But it is a company that's focused on US markets, where actually they're doing some work on the revenue cycle, which is helping to understand, make sure that you're extracting as much of the billing as possible. So this company is actually doing very well in the US at this time. Actually, they're onboarding hospitals left and right. But I don't think the question was about the US and other markets as much as it was about India. seriously, I have really very little pulse on how data analytics is playing out in the healthcare space in India. I would defer to either of my other colleagues whether anything is happening here.
Shruti, Balram?
Thanks, Srikanth.
Shruti, I think you should take it. Nothing much from my end either.
Yeah, I mean, looking at whether, this would, as a sector, we are sector agnostic. So yeah, we probably have to look at all the details of the startup and can explore. But yeah, it's interesting, but, we would be open to it. We could explore it further.
Okay, cool. There's a question
Thank you,
there's a question by Yash, but I think I can answer that. He says, how do we get in touch with you if we're looking to raise a round of funds in the next 3 months? You can always reach out to us and we will put you in touch with Shruti, Srikanth, or Balram. I think that's not too difficult to do. I think we can always connect you, and that's probably a good way to get to 3 of them. Is that a fair answer, guys?
Absolutely.
Yeah, so the 3, and I think I've sent some to most of you, so I think that will work for us. And another question I have for the 3 of you: are evaluations going to go up now? I mean, I know earlier Balram was talking about buying stuff at a better price, but do you think the evaluation of startups are going to go up after the pandemic, not right now? Those who sailed through the pandemic and then they are still there, do you think they would become more expensive to get into?
It's a tough question, Muthu, because you're asking us to look so far ahead and so many things could intervene. My sense is that there are several factors at play that could affect valuations. One is, of course, is generally that companies' futures are unclear, and so that has been the down pressure on valuations, and of course, fact that markets are overall doing badly and so on. But there is also, I think, the possibility, and again, I'm not the person to talk about it. Maybe there are others that have a stronger view. With all the uncertainty in the regular financial markets, there is possible that more people will say, "Hey, listen, you know what? Why don't I, maybe I should put some money into the startup ecosystem." And then suddenly the supply of money available, chasing good deals goes up. Then the chances are there that valuations could go up for a few companies. But I don't think it's at the stage that Kiretsu, for instance, plays. I mean, we play, as you know, as the seed stage. So I don't think it'll be there. It may be more in the later stages where the company already has a stable business model. Because that money that is going into the overall market will get redirected to seed stage investment. It's probably only going into investments that, if at all, will get redirected into investments that are in more stable business models, but early. So,
okay.
I mean, I don't know if that's even giving an answer.
No, but I think that's fair enough. I suppose if you're going to release initial funding, there's not much to talk about whether the evaluation is going to go up. I think your point of them being mature and they're actually generating income, that probably would be an area where evaluation might be a more crucial area. I think that's fair. Shruti and Balram?
Yeah, I would agree with him because it's very tough to assess the situation now that whether the valuations will go up. And I'm sure even once the pandemic is over, it'll take some time for us to come out of it. It's not going to be immediately where suddenly valuations will be up because the markets will be impacted, liquidity is tight. So in such a scenario, valuations to go up may be really tough.
You're talking about, Muthu, from now, is it? In the sense, see, today.
Yeah. Today, let's say I'm worth only 50,000. Do you think after?
No. So the issue is that when we value a company at the stages at which we invest, right? It doesn't go by financials.
Okay.
It goes by how much we like the company and how much is the entrepreneur willing to dilute and how much we would want to own, right? So it's not on the financials at all. I think the same would hold 2, 3 years, 4 years down the line. So I don't feel that there's going to be a spike in valuations. It might go up in the sense that today there is an agreed norm that we are willing to dilute X percentage. During COVID, you might get it at a slightly more cheaper rate than the agreed norm. It might go back to an agreed norm, but I don't think there's going to be a spike in valuations going forward.
That's fair enough. My next question is.
No, hang on, Muthu. I do want to add, though. I think because you've got a lot of entrepreneurs listening, I'll say this: that if the expectations on valuations are one of the biggest problems here in India, because on one hand, it's tempting to look at valuations that companies get in the US, and you might say, "Hey, I don't have anything that's very different. Why am I not getting those valuations?" It just doesn't work like that. So inflated expectations and valuations, if they were already a problem, I'd say that if you, in the context of COVID, it is an even more serious problem. And particularly if you're not one of those companies that's lucky enough to be in a super hot area, I think you're much better off kind of, basically moderating your valuation expectations quite dramatically at this point, just to make sure that you have enough money to survive, because there's no point in having 100% of zero. Right? And I would say that this is, if there was one leave behind I have for all of you guys, and I have had a few of you come to me for funding before from HTIC and Tech Incubator, and I'd say the valuation is seriously one of the issues that several of you have had problems with, because your expectations of what you're worth are just not realistic, particularly in today's context. So I would leave you with that thought that you have to, it's better to even cut it in half right now, and then survive and go for a bigger round with my dear friends from Chennai Angels and IAN down the road. So then you give us the good valuation, give them the higher valuation later.
I think you're quite right. The startups sometimes have unrealistic expectations of this, evaluation. I think what they forget to understand, you're only evaluated as much as the guy who wants to pay for it. There is no other mechanism to it except how much the other person wants to pay for it. I think that's something a lot of the startups are missing. Wow. So, okay, I've got another question. Then we will do a little quiz and then we'll wrap it up. So, my next question is, do you think for example, are we expecting any release from government to sustain startups during this period? Do you think there's anything they can do more than what they're already doing? Of course, they're doing a lot of COVID-related activities, and mostly they're giving them as grants and so on. Is there anything else the government could do to keep the startups happy, or survival rates? Any one of you thoughts on that?
I mean, I don't know. I mean, it's probably territory where IAN, I know, has done a lot of lobbying with the government, so maybe there's a perspective they have, and maybe TCA as well. But my only thought there is, I think there's a program that at least in the US, has been used, which is this, I don't know what they call it, payroll protection or something like that. Which is, see, the big problem today for many of these startups is that, I mean, while I can tell you, please don't try not to fire somebody, etc. The problem is that, I mean, you don't have cash, you don't have cash. There is a way for the government to be able to say, look, I don't know how they would do it, and maybe it shows my naivete and lack of understanding of the policy and lobbying circles. But if there's a way for the government to say, look, companies in certain, using some criteria, saying that, look, what, we will actually compensate for payroll for an X period of time. Okay. I mean, like in the US, they're giving companies money to pay payroll. Okay? So if there is something like that, that may be interesting to look at. I don't know. I mean, I'm just, again, as I said, I may be displaying my ignorance more than anything.
No, that's fair enough. That's fair enough. Anything the other two would like to add, Shruti and Balram, or there's one more question?
I think that, yeah, right now, nothing that has emerged yet. So
Okay. Balram?
Same here, Muthu. Nothing. Okay. So we have also, like what Srikanth said, we have made a representation from our side, which had nothing much. The main thing they wanted was to help them sustain, that is, pay salaries. So there's no business activity happening. All that has come down. Yeah.
Okay, cool. I'll check this question and then I will do the quiz and then we'll wrap it up. What approximate percentage of fundraise should be devoted to salary during angel round?
Oh.
What percentage would you recommend is approximately acceptable, I guess.
Is there a percentage per se, Srikanth? I mean, I don't know. I don't know whether there's a percentage that.
I don't think there's a percentage that we can say we're comfortable.
Yeah.
But if you're hiring a person, which is he was very important for the business. Depending on the space the business is, like, research in some cases marketing or brand building, then get those people and to attract that talent, yes, but there is no number put to it. Like, there's no percentage one can say.
Yeah, as long as the founders don't take the highest salary, we're happy.
And
Yeah.
that, I think, and what Balram said, there's a very important kernel of truth there, which is that we've got to make sure. See, what investors want to see is that the money isn't going there to make you happy. It is going to make the company successful.
Okay.
So, to the extent that the salaries seem disproportionate, for instance, we are typically, at least at the seed stage where we are, we want either founders that are not taking any salary, or they're taking 50,000 rupees a month max.
Okay.
So I mean, but if they're doing anything more than that, we're like, wait a minute, you're actually feathering your nest with my money. I don't want that.
Okay, fair enough. I think that's a fair input from all three of you. We do a little quiz and then we'll wrap it up. Sumitra, do you want to run the quiz?
Yes, sir. I'll run the quiz. So, moving to quiz, the first question is dash in need of assistive products for hearing, such as hearing aids globally. Option A, over 70 million. Option B, over 400 million. Option C, over 260 million. And option D, over 320 million. You can put your answer in the chat box.
And they count the first one who got it right. They are doing a ladder. The first right answer she will give. Any more answers?
Still, we didn't get the right answer.
There's a couple of answers there in the box.
No, sir, that is not the right answer, sir. So, no. So that is the right answer said by Jilma. The B, over 400 million.
You already said the other three are wrong. I guess you couldn't go any wronger.
So we can't count this.
Okay, don't count. The next one.
So the next question is, what is the second leading cause of death globally, which estimated 9.6 million deaths in 2018? Option A, stroke. Option B, diabetics. Option C, cancer. And option D, tuberculosis.
You're really morbid on a Friday afternoon, aren't you?
So the answer is given by Jilma, sir. So the answer is C, cancer.
Okay,
so moving to third question, we now have vaccines to prevent more than dash life-threatening diseases. Option A, 18. Option B, 20. Option C, 17. And option D, 23.
Jilma can't answer this time.
This time the answer was given by Sridhar, sir. So the answer is option B, 17. I'm sorry, option C, 17. So moving to, yes, sir.
It was not given by Sridhar. It was given by Yash. Please check.
17. Yes, sir.
17
yes, sir, 17. Okay, so sorry. The answer is given by Yash. So moving to fourth question, dash of countries have legislation to protect electronic patent data. Option A, 82%. Option B, 74%. Option C, 44%. And option D, 55%. So the answer is given by Rangavas. No. Answer. So the answer is given by anti-COVID. So option D, 55%.
Okay.
So moving to last question, non-communicable diseases causes dash percent of death globally. Option A, 46%. Option B, 71%. And option C, 62%. And option D, 75%. The answer is given by Aravind Sarkar. So the option B, 71%. So that's all for the quiz. So that's it, sir.
Okay, very good. Thank you very much. Do you want to show the poll results before I wrap it up? Do you have the poll results?
Archana can screen it, sir. So I will
Poll
stop
results.
it.
Yeah.
Yes, sir. I'll show it.
Archana, you have the poll results?
Yes, I will share it now.
Okay.
So the first question, what is your prediction on the COVID vaccine to be available? So 36% is the maximum vote we have received for within a year.
Mm-hmm.
And the tie between within 3 months and 6 months. And some of the people said like they can't predict it now.
Okay.
So the next question, what do you think the major impact of continuing work from home now and in near future? We got the same response for increased productivity and lack of physical interaction. And following that, increased stress. And then some have voted for quality time with the family.
Okay.
So which industry do you think is reaching its heights during the pandemic? So we got major polling for healthcare sector, followed by gaming, and then food, and then last by movies and series. So
Okay, very good. So is that over?
the last question, do you think the current model of digital cafe works? So 81% says yes, and some of them feels like it needs further modifications. So
Okay. Okay, thank you for that. Before we leave, Shruti, what advice would you give for people who are looking to raise money?
Well, I think they should get their story right. It's very important that they have their whole story right. Spend some time building up the presentation, and most importantly, I think would get a good mentor on board. I mean, on their field who has experience doing the similar things.
Okay, very good. Shrikant?
I'd say don't give up hope. It's going to be tough in this environment to raise money. So just don't get dispirited. The first person says no. Keep asking. Actually, even the same investors, there's no harm asking us once or twice, even if you've been turned down.
Okay, very good. Balram?
I would say every entrepreneur needs to be extremely passionate about what he does, which shows. And second is raise money today only if you can spend it immediately. Don't raise to stay alive. You might not get money for that at all. If you're in a business where you can actually spend it tomorrow, the day after tomorrow, and get traction for your business, then you should go and raise money. Else, try and survive, go nights if required, and then come back when it's ready.
Okay, I want to say thank you to all three of you. It's been a great experience for me speaking with the three of you. Of course, I've known you all for some time, so it's all. I mean, of course, Shrikant and I have done lots of things together, and Balram, you've been helping me quite a bit this week doing mentoring and stuff. So thank you very much, and also Shruti, please come join us more often. Give us all the support we need, because we can do with all the help we can get, and also let's. Anything you think that we can do to encourage the startups, to keep them in high spirits, please share with us, because you guys like us are also meeting lots and lots of people almost every day. So,
definitely.
Yeah, and thank you very much to the three of you. And I also thank my team at HTIC for, they've run a pretty smooth the 1 hour, I think. And I think all of you have a great weekend. Hopefully one of these days there's a physical, instead of a digital cafe, we'll have a physical cafe. For that, we can always do it in my office, because we have a nice little garden for those of you who have been to my office before. So we look forward to that. And thank you very much, as always, to all of you for attending the session. It's right on the dot. It's not even 6 o'clock. It's on the top of the hour. And as always, time is very important. Okay. Thank you very much.
Thank you
very much, guys. Thank you. Bye. Bye.
Bye. Thank you.
Bye.